Good morning, everybody. Thank you very much for joining us today. My name is Dan Resnick. I'm a partner in KPMG's customer strategy practice, and I will be your moderator for this session for the next half hour. And my job is to create a safe space where we can all finally nerd out about creditor insurance and not get teased about it. So really excited about that. We're hoping to make it a dialogue, and it's a nice and intimate group. So feel free, jump in, throw your hand up. We're excited to talk about the extreme makeover that we all think is about to happen in creditor insurance. The panelists and I really believe that credit insurance is about to have its moment. For a long time, it's really been the poor cousin, both on the retail banking, commercial banking, and insurance sides of the ledger. Nobody really talks about it a lot. But the reality is, there's over $300 billion of debt that Canadian households are sitting on, just across their credit cards, lines of credits, auto, personal lending. Forget about the trillions of dollars of mortgage debt that's sitting out there. And we all know what's happening in the economy right now, the pressure that Canadian households are facing, and increasingly the challenge of covering their monthly bills is entailing. And so we want to talk about how credit insurance can begin to more aggressively close that gap, help more Canadians feel included in the financial sector, and really protect their lifestyle while ensuring that they continue to have great access to credit. And so I'm joined by a couple phenomenal panelists who are going to help us think this through. Szeto is the founder of Walmart. He and his team are...
I wish I was the founder.
Derek Walton, Walnut, and they're bringing an amazing embedded finance and embedded insurance experience to life for brands like Neo Financial, National Bank, TELUS. Derek is a serial entrepreneur. In addition to founding Walnut and Walmart, he founded redflagdeals.com, and then he went to RBC Ventures, where he and his team really explored how they can push beyond banking to create great experiences for customers. And we've also got Marc Nantel. He's the National Director of Trans Global Insurance, which is a leading provider of creditor insurance solutions for brands across the country. And he and his team at TGI are really focused on making insurance simple and accessible for all Canadians. So to start the conversation, Marc, maybe I'll ask you to kick us off and give us a sense of why creditor insurance isn't the most talked about product in our financial toolkit, and why we think that may be about to change.
So creditor insurance doesn't always get the best reputation. I think in part because, just insurance in general is tough for many Canadians to understand. I've been in the insurance industry for 25 years, and friends and family have told me over and over, I paid a premium for this insurance and I never made a claim, so I feel like I wasted my money. So there's just a basic thing about insurance education. I always say, if you've paid your premium and you didn't have a claim, that's actually the best outcome. In my mind, insurance is a very noble product. It's about people pooling their money together, or their resources together, and to protect the unlucky few. And so if you didn't get to make a claim, you get to feel good because you help protect those unlucky few. So that's insurance in general. For creditor insurance in particular, it's because of the what we call the incidental sale of insurance. Basically, a customer is really seeking out credit, and not necessarily insurance. They're seeking out credit or a loan, and then when at the time of application, when they're offered creditor insurance, I think it initially makes a lot of sense. Because, I'm about to get into debt. There's a little bit of uneasiness around that. And so it makes sense to get that protection. But at the same time, I didn't go out seeking it. So I'm not sure if I'm making the right decision. And so there's a really great opportunity to present it online in a way that is simple, easy to understand, and brings that convenience to the customer. So we think is a very valuable product. There's a convenience to it, and it's just very, very valuable.
The concept that the incidental sale of insurance is very interesting. Now, Derek, I'd love to hear your take on how you see technology evolving in a way that's making it natural, frictionless, and I guess appropriately scary for customers to think about insurance as they are purchasing products and doing so on credit.
Yeah, I think like obviously everybody's going through like digital experiences these days, and in some ways insurance is just one of those industries that has been behind. If you think about retailers, they're offering warranties. Lenders should offer creditor insurance. It's sort of one of these basic valuable customer benefits that they can add on. They can help improve some of their margins as well, and the customer can get the benefit. And if you're thinking about it in a digital lens, it really should be as easy as like it's a checkbox, right? And sometimes what happens is you have the traditional experiences, and then you go and bring it to an online experience. You sort of forget about the incidentals, but the incidentals sort of make the package fulfilling. And then for the online specific folks, I think that's where in some ways they have an advantage. They're starting from scratch. I know some of them are in the room, so they can think about it and packaging it from sort of day one so that it's seamless, right? I think the idea is that we were talking even in the back, most people don't want to speak with like an insurance advisor. They don't want to spend time with an insurance advisor. I can't imagine why, but hopefully in this model, they can really get what they need. They can do it with really a click. And then we've even seen some models where it's actually just part of the bundle. So back to like, what does an extreme makeover look like? You can actually just include it in the package of what you're offering, and then the customer doesn't even need to necessarily make that incremental choice.
So, folks don't want to speak with their insurance broker for products that they don't necessarily associate right off the bat with areas where they're needing protection. It sounds to me, Derek, like we're talking a lot about embedded insurance, embedded finance, building directly into the flow of the retailers. Marc, I know this is a space that you and your team spend a ton of time on. I'd love to hear some perspectives from you on how embedded insurance models have evolved, how credit insurance fits into it, and then Derek, I know you have some phenomenal use cases and examples that I think would be great to share with the group.
Yeah. Well, it's what the digital experience brings is the power of convenience, number one, for sure. But the other thing is, when you're facing, again, consumers that could really use the protection, but don't necessarily want to spend time with an insurance agent, you can create an experience online where you really give an appropriate, good description of the product with all the necessary disclosures, because you've got to meet all your compliance requirements, and you do it in a very consistent manner. I would even argue that is more consistent than a team of insurance agents could ever hope to achieve. And so that's really the appeal of this digital experience.
Derek, want to share some cool examples of what you've seen out there?
Yeah, so like one of the things, like we've worked with Marc and TGI on a bunch of programs, and I think one of the things that this digital and API-driven journey sort of gives you is the ability to iterate and offer sort of multiple products. So even if you offer at time of origination initial creditor product, you have opportunities to go back with differentiated products. Like TGI actually has some really interesting products around sort of bill payment protection. So it's not necessarily like debt that you would think about in the traditional way, but all your customers also have bills. And whether they're bills with you or bills with other vendors, this is an opportunity to be able to provide them with coverage they need. And you can sort of layer these, and that's like part of what we're starting to see in the industry. Like you might go out with, if it's a mortgage, your mortgage creditor offering. If they don't take that, how do you come back with a different offering that might be appealing to them? How do you reach customers that maybe didn't take the product, on day one at origination, but then go back to offer a secondary product that might be more appealing to their particular use case? And generally speaking, like, if you think about the different things that it covers, like, I think job loss is one of the ones that nowadays is a little bit more top of mind. So back to, how do you make it appropriately scary? I think you want customers to know about the risks. And to Marc's point, digital actually gives you more consistency across the customer journey, and you can build a delightful customer journey that gives them the opportunity to be able to, get it at origination, get it at a natural follow-up point, and then you can think about, things like, payment cycles, anniversaries, other points and opportunities where you can sort of introduce the concept to see if it's relevant for them, even if it wasn't, at the point of origination.
Yeah. And if I can add, Daniel, like we've been focused on the advantages for consumers, but there's big advantages to the lender as well, to provide added value to their customers, and it adds a revenue stream. It could potentially reduce delinquencies, and it adds stickiness. So it's all around a win for the lender and the borrower to work through a good creditor insurance program.
Please. I was about to open it up to the crowd. Yeah. Makes my life easier.
I'm Elizabeth Balford, and I run a business that focuses on marketing and customer experience, right? So what I heard from Derek and Marc is so interesting because I'm hearing that creditor insurance, it could be embedded. So it's almost, I don't want to say invisible to the customer, but it's a little less obvious. Or you also mentioned that if they don't take the initial offer, you could return to them with something that might be a little more tailored to them. So I wonder if you have examples or some use cases to share around how that value proposition is different from one that's an embedded, product. We're just going to sell it to you all at once. Makes all the great sense that Marc touched on. Versus we're going to come back to you a couple of times to create perhaps an offering that's more customized.
Yeah, just to Canada's typically behind other markets.
Yes.
In the U.S., for instance, there's folks like Happy Money as an example, online lender, and as part of their loan, they just include a certain degree of creditor insurance, and it's across the board. And that's actually good. They're not doing it purely as a cost line item. They're helping, to Marc's point, sort of manage delinquencies, and at the same time, their whole brand is around how do they make this a differentiated lending experience. So that's an example of it's just baked in, right? And then for the online lenders, we work with publicly, Vora as an example together, and their Propel Holdings as the publicly traded co. And as part of the customer journey, you will have the ability to sort of one-click opt-in to be able to access the credit insurance coverage, and then we can come back, right? And so this is part of what I think is great about digital, is that you can build and have multiple products and test them. So if you're thinking about the traditional world and banks and credit unions and physical space, it's very hard to roll out different programs and then say, hey, I'm going to teach everybody this is the program today, and I'm going to change it tomorrow, and it looks like this, and the benefits are slightly different. You can test in a digital environment, and when do you want to have those interactions, and what is the package of benefits that you put in front of the customer. And I think there's other things that people think about today that are there are negative events, but maybe I'll hand over to Marc. There's actually products that can highlight some of the positive events in people's lives as well. It's another opportunity for another discussion.
Okay, can I hold off on that for one
Yes.
second? One thing I want to be very transparent. The coming back thing is really hard.
Yes.
So what we, in our experience, the point of decision, so the time of application for the loan or the credit, is where we achieve anywhere from 15 to 75% attachment rate, depending on the program. But we know that after that, later on, it's sometimes less than 1% in sort of the coming back attachment. We think that digital, building the right user experience, can help us solve that quite a bit. We know for revolving credit, as opposed to installment loans, you probably get repeat opportunities at a point of decision. So when someone is making a large purchase, particularly is when, when you sign up for the line of credit, decision point, And then when you make a large purchase, all of a sudden you get a little nervous. It's probably another good decision point. So again, through iterating and because digital gives you the opportunity to test it out, right? So we're excited about that. Other cool things, like Derek mentioned, one really cool thing that's sort of emerging and a number of insurers are starting to offer is a positive life event feature that gets added to creditor insurance. So essentially, when the borrower experiences a life event like a marriage, birth of a child, like a happy event, I think we have post-secondary graduation, purchase of principal residence, retirement. The insurer will make 1 or 2 monthly payments to celebrate with the customer. So it takes sort of the sting away of 2 things. Number one, this policy only covers me if something goes bad. And number 2, it gets away from the, well, if I never get to make a claim because bad things don't happen to me. So that's a feature that's becoming increasingly popular. Yes. So that's a really, really cool thing. I think another cool thing that is happening is TGI has been, I would say, just starting. So we introduced a few years ago, we sell it direct to consumer now, but bill payment protection. So essentially, insurance that covers you if you have a job loss or disability, covers your utilities payment or your mobile plan, or potentially even your fitness membership. Because we know that people live, like modern life is becoming more and more subscription-based, right? It's all about your monthly payments. And I don't know about you, but my kids cannot stand the idea of you know, if I lose my job, I'm not going to go without Netflix. There's a lot of opportunity to tailor programs around those monthly payments for sure.
Any other questions from the crowd? Going to come back to y'all in a bit.
So maybe another question for Marc. Can you tell us more about the kinds of customers that you typically see gravitating towards creditor insurance? What are the segments within Canada where you've traditionally seen demand, and is that evolving?
So what we see is creditor insurance is more popular typically with lower income Canadians. So I think the underserved population, because that's a group that is looking more for convenience, short-term coverages, and are not really interested in sitting down with an insurance agent and figuring out a big plan, right? And so it's, we find it's across all age groups, across really all demographics, but typically higher attachment rates with lower income Canadians.
And Derek, question for you. You know, the customer is obviously a core part of the decision, but you and your team really help bring together the retailer, the person who owns that customer eyeball, and the financial institutions who are driving the credit and underwriting the policy. Can you talk a little bit about how each of those different parties think about bringing embedded experiences to life, and maybe some of the watch-outs that you've seen as folks in the room might be exploring the integration of creditor insurance?
Yes, so I think organizations are getting better and better about like data. I think that's like, of course, one of the key attributes. So I think it's data, one, in terms of like when you want to have an approach and have that discussion, and then it's data on how do you be able to go share the data with relevant organizations. And what we're trying to do is make it easy, right? So how do we have a modern interface for people to interact with? If you have engineers on your team, they probably want to use APIs. They probably don't want to send files back and forth. And that's back to the speed and the nimbleness. So, part of what we've appreciated working with TGI is like the ability to craft new and different constructs and structures that would be appropriate for the particular channel. But what we see as being sort of the primary types that are able to get out to market fastest are the folks that have engineering and data capability and the ability to leverage APIs. And the folks that don't and aren't quite there doesn't mean they can't get there. And it's how do we help them, get there? Because they'll have all the advantages that we've sort of talked about in terms of being able to iterate. And traditionally, I would say credit insurance is not a space you could iterate a lot with, but now you actually can. And in order to do that, you have to bring insurer partners that can also iterate, because sometimes the insurer partners are not that flexible. And you have to bring, distribution channel partners that have the ability to do A/B testing and be able to show different product journeys and are thinking about it in that more modern digital way.
We've only got a couple minutes left in the session. Folks in the crowd, you've chosen to give your time to Creditor Insurance. You must have a unique love for this kind of product.
Instead of AI, I think, right?
Nobody wants to talk about AI these days. But actually, Eugene, being a bit facetious, but I think we are seeing a lot of overlap between emerging technology, AI, machine learning, and creditor insurance. Derek, Marc, any thoughts that you have on, the future wave of creditor insurance's extreme makeover and how things like AI can further change the game for Canadians?
I think from my perspective, it's sort of like what we've talked about in terms of customization on steroids, right? So right now it's still going to be a certain set of programs, but you could imagine in the future state, based on the data parameters that you have in the database of who bought what products and what the conversion rate was, what their point was interest, the sort of machine sort of automatically optimizes itself. Right, and so in some ways it's not that complicated. It's trying to get all the players in the ecosystem to be able to deploy something like that.
Yeah, really what technology brings is the ability to very quickly optimize the convenience, the simplicity, and make it not a scary product to consumers. And so we're excited about that. We think there's going to be a lot of innovation. Again, I've mentioned different types of payments that you could protect. I'm sure people in the room can probably think of more. And we get approached every week now with different fintechs that have these ideas and wondering how we can bring the right protection products along with financing, lending, banking products.
Eric.
You've seen as far as the take-up of credit insurance just as the economy ebbs and flows. Have you noticed that?
Sorry.
What have you noticed in trends with credit insurance? More people buying it as the economy ebbs and flows. If the economy is doing well or not?
Just for folks on this side of the room, the question from Eric: what are we seeing in terms of trends of different categories of creditor insurance that are ebbing and flowing as things evolve in the economy?
So what we found is it really depends on the underlying product that the creditor insurance is attached to. So the creditor insurance will sort of follow what is happening with that product. Yeah.
Any other final questions from the crowd? I know,
Jill has a question.
Jill, yeah.
Do you want to share how you're seeing non-financial institutions start to lean in the creditor perspective and how they're starting to leveraging creditors for their customers?
Yeah, that's a great question. We are increasingly approached by, you're right, non-financial institutions about doing that. There's challenges with that around compliance and the regulation around that, and we're working through some solutions for that. But yeah, different companies, I think we have even collections agencies and different industries showing interest in creditor insurance because they see the value that it brings, not just the protection, but the reduction in delinquencies and the added value to the consumer. So wherever people are spending money, and if they're doing it on credit especially, there's sometimes an uneasiness around it. And so there's a lot of opportunities out there that we continue to explore.
So I know we're at time. Derek, maybe I'll give you the opportunity to have the final word. Any last thoughts on the opportunities that you and your team see to bring creditor insurance to life?
To Marc's point and Jill's question, like there is a lot more sort of non-traditional institutions that can offer it anytime. There's sort of an obligation, so telecoms, utilities, think of all the bills that you're paying on a monthly basis. Those are non-traditional channels that can sort of also offer it that they wouldn't have thought about. And nowadays, back to sort of the digital notion, you can do it with a lot less friction and for a lot lower lift. And then you have partners like TGIs that can help you through the compliance aspect, and hopefully we can help with some technology aspects as well.
Well, I think with that, thank you to everybody for taking the time to join us today. And let's keep the conversation going, right? A whole bunch of folks who really love creditor insurance. Nice to all be in a room together. Enjoy the rest of your day, all.